This is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Hey, how's it going, everybody? It is Wednesday. So we are doing our live stream today. So I hope you all can make it. I'm just a few minutes late because I was just setting things up and whatnot. I went on a nice run this morning. I like to go running barefoot, and a week ago Monday I ran 10 miles barefoot, which was really sweet. But then it snowed a ton, and it's just no good to run in snow barefoot. It just tears you up. So anyway, I tested out some new Vibrams this morning, and it was pretty cool to try those out for the first time. So I'll get used to those, but it was a good experience. It was nice. So feeling good, ready to take this day on. So let me just, first of all, let's take a quick look at where Bitcoin is and what's going on. Looks like, so obviously today we've got a little bit of a red day, 1.6% down at current time. And we're pretty much at 16,800. Bitcoin is doing its own thing, which is pretty cool. Dilemma, welcome to the chat. Thanks for also saying something, so I know that this is working. I still feel like a total newbie at this. Okay, but anyway, yeah, so Bitcoin is sitting here. What's happening, what I believe is happening, is that we've had this this drop down. And then we kind of had a symmetrical triangle at the bottom of this. This was what you would call a bearish pennant. No, it was only 10 miles barefoot. But today I went 4 miles with the Vibram shoes on, trying them for the first time. It was really nice to run across gravel and snow chunks, and it was just fine. So anyway, here's our the midpoint of this symmetrical triangle right here was sort of the flipping point for what will happen next. And when we broke out to the downside, what should have happened is we should have had a massive move. The size of this pole should have recreated down here. So we should have had a pretty decent drop off. And we did not. We had a kind of a weak one. It was slightly lower, but nothing to write home about. And but we came back up and hit our midpoint and rejected off of it. So this was kind of an odd structure. And then we found a higher support than our most recent one. And then when we reattempted, we went through the 20 and broke through. We've been consolidating in this range for a solid 6 candles in a row. Today, we finally came back and found this as support. So as far as red days go, where you're kind of hitting the lowest candle body of the last week or so, coming back and hitting this line as support is fantastic. This is exactly what we want. So not only is this a decent structure, but it was something that we also expected. So let me just show you the current. Let's see. This thing just loves to, all the stuff loves to disappear on me. All right, so let's see. Just push update here. There we go. Now everything's back. So I put in the current data just for our estimation here, and our most what we're tracking closest is this situation. And so September 12th of 2015 is sort of our day. And we had a significant percent drop back here. And then we had a little bit of a rise, and then we came back and found it as support, and that's what built us into the next move. So we've been looking at this date for weeks. This is exactly the way Bitcoin has been tracking. And if we were going to track this perfectly, we would have expected a pullback. And that showed up in the data. That's where these negative 3% and different things came from. Because from the top, so this is taking a candle from up here, dropping down in 3 days, 3 days from now, or 3 days from this data point, and 5 days down, we'd be down about 3%. So we haven't even seen that yet. So if we took sort of from our highest close, and we went about 3%, about 3.5%, that puts us at 16.5 or something like that. And I don't think we could wick down to here, but the structure of our current situation is that we're heading up. We've leveled off, we've consolidated in a higher place, and now we're coming back down and hitting our midpoint as support. This is a pretty bullish structure. So I'm not sad about it, and we also saw this playing out in our prediction as well. And so what I'm loving is that this candle's not closed, but even if I put it there, look at our variance. Our variance has improved completely. So that just makes these data points way, way better. Every single one of them is better than a 20% variance. And our best case scenario is 11%, which is phenomenal. So that means we have, perhaps we have one more red day or whatever we need to do to establish the support on that midline. And then we start ramping up and things will start moving along according to this. So this is our most scenario. And the other one is unbelievable, because look at this. If you can see the numbers on this data set, we have August 27th of 2016, August 24th, 25th, 28th, September 1st. Like, this is all the same data. So if this scenario doesn't pan out in 2015 and we move along here, the next most event is this, which is also awesome. We've seen this popping up in our AI a lot. A significant drop. We popped back up a little bit, had another dip just like here, and then we rose up a bit, and now we've kind of pulled back to establish some support, and we're just waiting for a candle like this to show up. I'm expecting a pretty decent green candle to just pop up out of, along here somewhere. And even, every other scenario that has happened in the history of Bitcoin, if I look at the variance between just days difference throughout all of these events, this beats every other case in every other situation that Bitcoin has ever followed. So between these two chart structures, that's what's building out our expectations. So looks pretty good. I think this is a good thing, even if we had a small candle or a little reversal candle tomorrow that snuggled us up to this line. By the way, the line is at 16,700. Then we're ready to rock and roll. Okay, so I wanted to do something a little bit fun today. Looking at the kind of the big scale. So when I go to weekly and I kind of back out and start looking at everything, these big red candles or big red arrows are our midpoint. So this is our halving event date. And so our halving event is, if we work backward from our halving event, we're right in the sweet spot of hitting, establishing our lows. All right, JGW asks, is there a high probability that 18 or 19 would work as a hard resistance now? That is an awesome question. Let's just answer that really quick. So at 18 and 19, we have a very strong resistance. So we have a really strong resistance right up here. The AI is saying that we should have about, 21 to 30 days from now, we should be moving up anywhere from, well, best case scenario, it was like about 8 or 9%, cooling off to about 6%, and then moving higher from there. So if we look at our current price and we go up 7 or 8%, we're looking at a rejection on the 50. So that's where our first resistance will be. This line here, this trading range at 18,800, this line is very, very strong resistance. So I think there's a decent amount of short-term trade to be made. If we bounce off of this and either reject here or here, this will move the dial pretty good. But what I like about this is that we've had a selling climax, we've established some decent consolidation. So even if we reject off of this, the odds of us consolidating higher is good. And so that's the trade that I'm interested in. If we fall back down to the midline or below, things are going to get ugly, and it'll almost be guaranteed that our bottom's not in and we've got some more bleeding to do. But let's do some analysis on where our price should be based on the halving. So if we look at a real zoomed out viewpoint, our most reliable predictor of where the bottom has been based on the next halving date. So if we take the halving date and we work backwards, we're finding our bottoms a lot more reliably than taking the top and going forward. So especially when we had a double top, this became really confusing. Which one of these was the event? It's pointing to the second one currently, but had we just used the halving event and worked backwards, we would have gotten there a little easier. So let's take a look at this. I've just pulled up the historical halving events, and these are the dates. So make sure that's nice and big so everyone can see. Our first halving was November 28th, and then July 9th of 2016, May 11th, and now the next halving date. I think I had just kind of thrown up the one that I found first. This said April 29th. So if we're on May 2nd, that means we haven't moved too far. But predicting the next halving date is a little bit complicated, because what you have to do is you have to take into consideration that Bitcoin is a block on Bitcoin's blockchain is found and submitted to the blockchain every 10 minutes on average, or at least that's the goal. Well, if miners are ramping up and more mining capacity is entering competition to mine Bitcoin, there'll be a period before an adjustment happens where blocks could be found faster than 10 minutes. Then the difficulty will adjust. But if there's a steady increase in mining hash power, then we'll always be a little bit behind the ball on finding the next block. So that means that the halving date would happen much sooner, because the blocks are being found. The date isn't an actual date; it's a number of blocks calculated. So if I go to CoinMarketCap, we're on the current block that we are on with Bitcoin is 766,337, and the halving event will happen when we reach a height of 840,000. So that means we have 73,000 more blocks to solve or to find. And if this happens every 10 minutes, then you can kind of estimate a certain number of days that will get us there. Well, depending on the website, everyone's got a different estimation of what that might be. And some websites are just lazy. So Bitcoin in 503 days. So if we take today and add 503 days to that, that gives us April 23rd of 2024. So April 23rd is one option. This is buybitcoinworldwide.com/halving, and they've got it at March 1st. So these guys are really off. They say 480 days, but if you take today plus 480 days, that isn't even March 1st. It's March 31st. So these guys are up in the night. I don't know what to say about these guys. They were one of the first results though. So who knows what kind of false information these people are just handing out, and they're the top click on Google. Then you've got your Coin Wars, coinwars.com. Their Bitcoin halving, they're looking at May 12th. So they're a little further into the future, and so they're assuming that, you know, blocks are being found slower than 10 minutes, or maybe 10 minutes exactly. Maybe they're not taking into consideration like how fast we've been doing it recently. There's going to be some variance because we're far enough out that even a few seconds, you know, shy or farther out than 10 minutes, and the date changes. The one I like to use is bitcoinblockhalf.com. This is an old site that I found years and years ago, and it talks about the inflation rate and different things. I tend to believe them a little bit more. They're right in the middle, May 2nd. So I'm gonna use May 2nd for our analysis. And then I'm taking the halving dates, the price that Bitcoin traded on the halving date. And so right now, if we say that we're 511 days away, what I want to do is check the price 511 days before the halving and see how far below this price we were. So let's take a look at that. So this is T minus 511. So we'll just take this date and subtract 511, and we'll get some data points here. And I guess we can, this is hopefully matching today. I guess we're a day off, but it's all good. So let's see what the prices of Bitcoin were on these days, and we'll see if we can fill in the gaps. So our first data point is, let me go to daily, and I'll just use the close. But we're looking for, I don't know, we may not have a date. Well, we can estimate. Yeah, I don't know if that'll work either. Yeah, I guess we may not have a date on July 6th of 2011 yet. Our first date that even came on was $11. And yeah, maybe that may not help. That may not help us. All right, let's go look at 2016 or 2015. So February 14th of 2015. That'd be in here somewhere. Okay, so the close on this day was let's see. Well, let's see. This doesn't seem to be matching my timeline. July 9th, 500 days ago. Um, that is curious. All right, now I'm starting to get myself confused. If I'm working myself, so 511 days back. Oh, I was looking at 2014. Okay, no wonder I'm confused. All right, so here we have February 14th of 2015. Here's the close. So the close was 256.99. 256.99. Okay, and then our next one we need to find is December 17th of 2018. So let's go find that one really quick. December 17th. Okay, so the close was 34.96.73. 34.96.73. Let me make sure I got that right. December 17th. 349673. Okay, perfect. All right, so we're kind of working off of 2 data points. But let's just see what the difference is. You know, how far did we have to go from this price to this before the halving event? So I'm just going to take this, the halving date price, and divide that by our 511 days to go price and just get a percent. So, wow, I did not expect them to be so close. Okay. So it is literally, we're 1% difference between where we were and the price we were at the halving. Wow, that is remarkable. Okay, I wasn't expecting it to be nearly the same number. Holy cow! All right, so if this is our number, so if I just take I'll just take the average. I'm just curious to see what if I take this number. See if this gets me there. Yeah, so we would have had to trade around $4.88 if we were going to follow this same thing. Is that reasonable? I'm not entirely sure what it would have been like. But we can at least take our number today. So today we already know we are currently trading today at a price of 16.8, we'll just say 17. So what that means is with this, we should be able to take this number and figure out what our price should be at the halving, and it'll kind of tell us how far away, kind of what our expectations. Hopefully you can see where I'm trying to go with this. So all I'm going to do is I'm going to take our current price, I'm multiplying it by our average of our other two, and this is the price that we could expect to see on May 2nd of 2024. That price is $42,500. All right, what do you guys think? $42,500. Let's go look at the chart now. Go into weekly. Let's spread things out a little bit so we can see. And let's put this on here. 42,500. $42. Right up here. Interesting. Okay, so let's put this down. I'll just create a line, and I will put the coordinates at exactly our number. Just we'll just put this on there and we'll come back to it just for fun in the future. 42,572. Okay, so that is our expected price on the halving. So when the Bitcoin halving event happens in 511 days from now, we think that we will have a price of 42,500. Now, is that realistic? Moving down, so on the halving, how far away were we from our prior all-time high? So that could be an interesting thing to check. So here's our halving. We had about a 100% move before we reached our high. So obviously this isn't going to play out because 100% move from 42,000 is 85, and we did not get there. So question is this number a little aggressive? I'm not sure. It really will depend on the rest of part of it. It'll be wondering how the rest of the market will shake out. If the whole world goes into some global depression, I think we're going to struggle. But if we find some footing over the next couple of weeks, and we can reclaim some ground and start, let's say we can go sideways and we can get out of some of this downward pressure, and we start leveling off in this area, I could see us moving up to this resistance, pulling back, testing again, and moving up. I bet we could get there. This probably isn't that unrealistic. So anyway, if you can kind of, you think about, even though I do a fair amount of a little bit more short-term type of trading, it's worthwhile to do these thought experiments and really kind of gut check yourself to see, where can things go and where can we expect things to be? Because days like we've been having recently, where we're just kind of grinding away and it feels like there's a lot of depression out there of markets being pulled down and not a lot going on. Markets don't go down forever. That just doesn't happen. There's always ebbs and flows, and there are seasons of euphoria, and there are seasons of crypto winters, and it all fluctuates. When the bottom is fully fleshed out and fully there, then we turn around and we move we move to higher levels, and the circle of life continues. So we just have to keep our eyes on what to expect. A year and a half from now, having a 250% gain is a realistic thing, especially for Bitcoin. What does that mean for the rest of the market? It could really carry us. So if I look at the total market cap of all crypto, things are definitely moving along. One thing I wanted to show you on the monthly chart, and this is all crypto. So this includes Bitcoin and alts and everything. So we had, you can see very, very clearly on the monthly chart for the total crypto market cap that we've come down and had this was our first selling climax. Our next selling climax is actually not too far away. Like, we're right in the realm of our prior drop, and there's a lot less steepness in the chart. So normally how these things work is when markets are moving up, it seems to increase in intensity. It gets steeper and steeper and steeper and steeper until you have the most vertical moment, and that's when you see a pretty good crash. This is kind of the bubble hypothesis. and then you'll come back down. And as things get steeper and steeper and steeper, they finally come to a head. When that steepness wears off, that's when you're starting to look at a change. So just like this, where we got steeper and steeper until this moment, then we started to change momentum, because halfway through, we kind of ran out of steam and we're starting to turn this corner. Same thing here, where we got really, really, really steep and we started slowing down. We're kind of putting the pedals on, and then that's when we turned the corner. And that's what I'm seeing here, because we have this candle is shorter than this candle, and this candle is shorter than this candle, and now we've had a significant change. Like there is a tangible decrease in downward momentum. And so I just feel like we're getting there. We're getting there. So at some point, we're going to have some kind of a shift. And maybe it's months, you know, maybe we start to flatten out and we finally get a small green candle, and then we rise back up to this level here. Well, then you're on your way, you know, because by now you've sold all the smart money that we're moving up, and they're in and ready to rock and roll and push things to the north. So anyway, that's kind of my thoughts and my analysis for today. We're getting there. It feels like we're closer than ever. You can, you know, especially when you're looking at the this AI. Bitcoin has seen significant drops in the past, and we've also seen a loss of downward momentum, and now we're establishing some footing. We're regaining our composure, and we're revisiting a resistance and finding it as support. So I just don't think it'll be too long before we start to move up. It would be perfectly fine to have a couple of days down here, and if we could do that and then turn the corner, we're gonna see some upward movement, and it'll be a nice relief for even if it's temporary. It'll be nice to kind of have a response to the FTX drop. You know, things that go down really hard after a consolidation, there's gonna be something on the other side of this. And that's what I'm kind of looking forward to in my own trading. Well, I guess that's about it. Thanks for being here, for the ones that tuned in. We'll be doing this every Wednesday at 12:30 Mountain Time. So hopefully it's at a decent time during the day. Just one last reminder that on cryptoinfluencers.com, we are giving away $1,000, $100 to 10 different people. All you have to do is subscribe to the free channel. We're just trying to move people away from some of these other bigger platforms and create a little niche here. By the way, you can, if you do content and whatnot, you can also do your own channel here as well. So this is something that I'm interested in working on. So thanks, JGW. Appreciate you being here, man. And I think that was it. Yeah, just that I'm doing that. For those of you who are curious about, you know, how I do my own trading and whatnot, you can always check out the pro channel. But I know things are a little, you know, so I know that'll probably pick up once we get out of this kind of crypto winter and the grind. So, all right, you guys, hope you have an awesome week. We will catch you live next week. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.